Hey guys, taking a look at the last pair that we're going to be looking at this evening, Aussie US dollar. Here we see that the market has actually finally hit the outer uptrend line. This followed this sharp breakout from the inner uptrend line since 2012. Since then, the market has created this sharp downtrend in favor of the US dollar as we headed towards this major trend line barrier. From here, the market could continue to break lower and continue the gains in favor of the US dollar, despite the fact that we are actually overall in a more dominant uptrend. Given the fact that the momentum is now in favor of the US dollar, we could actually see this downtrend continuing to produce continued gains for the US dollar and continue the downtrend below this trend line. However, given the fact that this is a major trend line and that the trend is dominantly bullish, we could actually see the market temporarily move sideways before rallying and U-turning to break this inner downtrend line and then the outer downtrend line to resume the uptrend. So those are the possibilities that we generally have to consider whenever we're talking about a break of whenever we are at a major trend line. So taking a closer look, we can see that just before this barrier was hit, the market had broken out of these two consolidation boundaries, a medium range consolidation and a small range consolidation that actually led to the breakout of the support boundary of both setups. Here we can see that the market meandered and took its time with these small candles until it started to move sideways before actually hitting the barrier. Generally speaking, across the market, especially when we're talking about the larger time frames, whenever we are approaching a major trend line such as this, the market tends to lose a lot of momentum as it gets closer. This is why trading at this area is very difficult and very risky. It is normally the better option to avoid trading altogether until we get a clear signal from the market as to whether or not we're going to continue to move in terms of breaking the barrier or pulling back to resume the direction of the dominant in the dominant direction defined by this trend line. So that is generally what takes place at this area here. A gradual loss of momentum and activity, and which will eventually give way to the formation of a setup that provides a signal to either continue in this direction or rally to continue and move in the opposite direction. So now that we have hit the barrier, the next step is for the market to provide us with a setup in the form of a consolidation similar to this one, or perhaps as large as this one here as well. So right now, trading this is going to be very risky. Some persons may already be trading short, and they would have probably been, their methodology to trade would probably be the fact that the breakout that the market has broken below this. So for some traders, the fact that this barrier has already been broken might be enough for them to start entering short. But because of the strength of this trend line, that is going to be a very risky move to make right now, especially since we're not that far below this trend line as yet. So the preference would be for the market to wait until the market provides us with a setup and then a clear signal in either direction before committing ourselves to a bearish or a bullish move. So right now, traders may be getting some small pips, but I wouldn't be surprised if that gives way to a reversal that takes us back above this area here as the market forms its consolidation setup to determine the ultimate long-term direction. So staying out of this area here, If you have positions here, I would advise you to close them and move on to another currency pair altogether. Because right now the market is going to continue. It's going to continue to be very volatile at this area here. So stay away. Let's be patient and wait to see what takes place and take action accordingly for a much better setup and a much better trading opportunity.